Hey guys, and welcome to episode 3 of Would You Have Survived? In this episode, we cover a open gap for the week where Monday closes this range with the anticipation of our review on the watch list. If you have not got a chance to look at the Sunday's overview, please go back and watch that video. This video and segment of Would You Have Survived, we walk through the price action of the day, but I am literally building on the outlook that we gave to what actually has happened. So in order for this to make sense, you might want to go back and watch that. But if you are game and want to see what actually took place, then continue to watch. All right. Welcome. Now, hopefully, today was a great learning experience or trading day for you all. The market was definitely favorable to all parties. And what I'm doing here now is going over the recap of what has taken place in the day. These are moments where after the market has slowed down, it has already hit its targets. It didn't hit its objectives. You want to see what the week is set out to continue to do, or if we are in the same position that we were in last week. Okay, so if you haven't watched the video, go watch the Sunday review where we break down the ideal of what we're looking for going into this week. The Sunday observation alone gave us great range and some setups for the session that took place today. Okay. So again, as I do this video, this one is part of a segment that I like to call Would You Have Survived? So, in this segment of surviving, what I would like to coin this particular video as is just the week's opening and looking for any objectives. Okay. So, what we're going to do is we're going to go look at SPY first. We we did map that out. And as you can see here, now the day, remember when we were looking at the market here is where it last left off at. Notice how if we look into today, price actually ran down to sell side, ran back up, buy side, came back for the retest, and then we took off. Back up into the 600. Now we're at 603 area, which is cool. So if we go to the daily, actually see the weekly or the monthly. I don't think we fully marked the levels on the monthly. Okay, these were here. This is what we're looking at. Okay, I don't think we didn't go over the actual analysis that you see with my lines here, but notice how we ran up into these key levels. Anytime you see these indicational lines, these are key levels for me. I didn't use them. I believe when I was looking at spot, I was showing you all the pre-market. That's what it was. Yeah, so it was we couldn't see anything here, which is why we go and we use in Q. But I want to use Top Step because Top Step actually is working for me a little better. Okay. So here we had price with the gap down. And we noticed on that gap down that we had taken a major level. Okay, one, two, three, four. All four of these levels got hit. So we knew that the idea was that we would not look to see lower prices, that we would look to want to see price actually go higher. And as a result, okay, this is what we were looking at. Notice if you take your vision here to the right part of the screen, this is what we were seeing at the time we were looking at the Sunday overview when the market opened, shot straight down, and it came back up and consolidated a little bit. So we roughly entered, I think, roughly about like 9:30 into a trade, and I'll show you that towards the end. The result of that, and then what happened was we ran up here, 2 a.m., 3 a.m., and then 4 a.m. punched up. We closed this gap. Price came back down for a retracement, pushed back up. We used 7:30, 8:30, and then market opens at 9:30. It actually ran down at market open. So here's where it gets very creative when you're looking at the market, because this is what we were seeing before the market opens. Okay, 9:28, 9:30, right? 9:30, market pulls back. So here, if we look at the 15-minute time frame, we have price run up and close this gap here. It closed it before the market opened at 4 a.m. 4 a.m. runs above this internal range of liquidity, and then it retraces back down, and then it runs back up. Remember this area? This was that 4-hour candle. Utilized it, came back down, repositioned, and then price just came back and went higher throughout the trading day. So depending on how you were trading, again, you know, there were plenty of opportunities for you to see price either for longs or shorts or longs. But ideally, imagine getting in. At what point would you have saw yourself getting in the market, right? Imagine seeing price break down, wait, pull up here, and then you get in for longs. What happens? Rejects. So you're either holding or you get stopped out or you get liquidated just for price to run right back above and keep pushing to where you anticipated, right? Just to probably possibly break even. So as we look at the objective that we were intending to see, notice how at 9:30, 12:30, you got these crazy wicks. So possibly being up here looking for short longs to retrace back up and then instantly getting wicked out, right? Because price pulls back against you. Or you were looking for this short to see price come back and retrace at 9:30, right? Obviously because this is hindsight, you can't see it. This right here was a major key level as we marked it on the weekly, or I think it was the daily. Yeah. Let's go back down to regular trade now. Yep, here we go. So we marked this low, and then we marked this close. Price pierced it, came back down. Notice here in this gap, we barely closed it. We came down and wicked down at 12:30, 12:30 low is 738.50, and the close of this candle is the close here. This is the close. The close is 704.25. So we didn't actually close down on this candle. We just kept wicking, wicking, and then to back off to get back above here where we ran back up. Now, if you look at a 5 minute time frame, all right, 9:30 sold off, and then re-entry at 9:35. Just waiting after that 5 minute candle close. You can even wait for that to close to get back in. Go for these longs. Each candle represented 5 minutes, so 5, 10, 15, 20, 25, 30, 35. So for about 40 minutes just sitting in this. And then here's that chop. This was a breaking structure here. Retraced and then came back down to end the morning session. Then you get the lunch session. And then a continuation into the afternoon. You look at the extended, they still push price up. And this was that high level that we were looking at. Remember how we were looking for the highs to be taken? We said that this one was taken here. This one wasn't taken. And this one wasn't taken. But notice how price here has taken these highs. So what are we looking for going into tomorrow? Well, we can't say that we're looking now. Price closed here. Retailers can't see, right? Because to them or to this view, you'll notice that price looks like it hasn't taken these highs. So what we now have here is a possible gap. So the closure on this one was 207.550. Boom. Okay. So now we have here. Now we go back to the extended trade. Now prices up here. So now we have a potential gap. Now, if the gaps get over 200 points, usually they're not going to close it right now. We're roughly at about 148 points on this gap right here. So, meaning price, if it doesn't come back down here or close it, or come back in between or use this area, then when we go into the open of 9:30, then whatever the difference is between this area and wherever price is from here to here would be the gap that we're looking for. So if we go to the higher time frame, we took this high. We have this high and this high. We mark it off. Right, you got this high and this high. So if we are to go anywhere else, our next targets would be this high and this high. Now, this was a major high that was taken. And if we got this open here, we did not use this price action just yet. Our next objective, because remember, this is our line in the sand for our shorts, and we took price here, 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 and here. So these areas have already been targeted. What is the next sell side target here? So we still have this high and this high that can possibly be taken. Now with the weekly profile, this is Monday. Tuesday usually creates the high. So ideally, if Tuesday technically is creating the high right here, we look at the daily. Tuesday has already pumped up, so this is the 23rd. We can't count the 24th yet, but this candle, yeah, there we go. On the daily, this pops up as the 24th candle. Even though it's the 23rd, 6 p.m. starts the next day's candle. Just keep that in mind. 6 p.m. On futures starts the next day candle. So Tuesday candle technically would have created this high. We would want to see it go higher. If price pulls back in from a daily standpoint, price could come back in here from to 50% per se, which would be ideal back into this range. On the 4 hour standpoint, we have see this wick took this wick. That wick came into here. Let's see what that is extended. Yeah, we can run back into here and here. This would be a bullish order block. It's the lowest candle, the highest candle. So, what are the objectives? Again, we have 308, and if price wants to go higher, it would utilize these areas. So, price will need to get under here. We got this area here. We got this. We got this fair right gap that it can use. So, we got roughly 3 areas that we can see price possibly touch if it does want to come lower. But again, this is the current gap that we're looking at. Um, so from a weekly standpoint, this is our swing high. We still got the month left. All right, so this is still a strong candle. We don't have any shorts. As I mentioned before, we need price to break below here from a weekly standpoint. If we look here from a daily, the highest up candle here. Uh, this one looks like the highest. We can say here is when we start price break. The last up candle. Or from a swing high, we got this high. So we got 3 areas we can keep our eye on. These 3 candles. This right here. I said these 4 candles because this is the last up candle before we take that down candle here. Price runs right back up above, close to all-time highs. Uh, then we might see that next objective here once we get some breakdown on this side. But we'll see. So I'm good with the levels that I still have marked outside of what I just updated on the chart here where this open. Wanted to see what it does. Um, that's all I have to assess. So when you go back through your charts, just ask yourself that question. Would you have survived? You know, you could put yourself in the right trade, but your size, your timing will matter whether you get to benefit or profit from your ideas. So there's a lot of key points that I am not directly mentioning. But again, I am reviewing and assessing this as if I am just talking to myself, because 9 times out of 10, that's what I'm doing. So, with that being said, hopefully you can go into your charts, look at the day. Again, this video is just more so a recap after doing the Sunday watch list of what happened so far, and we've actually hit some objectives. Um, it could have been a little tricky depending on when and where you got in. This was a day where price would run up, you would get in, you would get in too early, and then it pulls back, and then you might add in a little later, or you hold on for dear life and try to recover break even. But if you were mindful of the times where price was to make the major reactions, then it was easier trading intraday, if I would say. So with that being said, we will check in to see what tomorrow looks like. Again, we are close to buy side, and I would like to see what that does if we continue with a traditional Tuesday high. Other than that, if you are interested in learning more or actually getting the live commentation as we do these reviews, please click the link somewhere in the description. We are establishing a free trial to our Discord where you can find a lot of valuable resources. So until then, and next time, trade well. If you make it towards the end of the Sunday's overview, you'll see that I entered into a overnight trade, which was on a practice account. Again, it was not my actual active time to trade, but the market looked like it was promising for a potential setup, and I wanted to be sure of what was taking place. So, as a result of that particular trade, here we have the run up where we close this gap. To the left, you'll see the before, and to the right, you'll see the after. And as a result, we were using 5 contracts. One contract was left as a runner as we did hit the run up on the limit order, and we closed out on the trade. Everything in total, $1,503. Now here we are where I am showing you two accounts outside of the swing trade that we actually took some profit on for the day. These are evaluation accounts with prop firms. So I am tracking a timeline in regards to payout eligibility. But for the price action on the day, we were able to acquire 398 on the first account, and then coming back with the second one at $1,510.86. We did not get a chance to trade the entire full day as the target profits based off of my trading plan were already hit. So there was no need to risk anything else to squeeze anything out of the market, though it did provide multiple opportunities for additional setups to be made. I am just going to notate this, and then when I get into my next opportunity to trade, to just be mindful that I am only here to take what I need from the market.